How come I don't see it coming up on YouTube?
Oh, it's there, brother.
Oh,
We're good now.
well, I see it, but I don't. Let me check. Oh, there it is. All right, cool.
Got it. What's up, Vivian the Vegetarian, Diaz, MacBees, Road Dog? It's good to see all you guys. D Sauce. Hello, welcome to Boss Blunt's Think Tank. I'm Boss Blunts, Marcel Kalinovic, the Butcher of Wall Street. Today, we're going to be discussing AMC, GameStop, the Cdcc, leaving the DTC, JP Morgan, bribery and slush fund lawsuit, as well as Robinhood getting fined. Oh, it's going to be a fun one. This video is the next in a series discussing the implications of geopolitical and macroeconomic events on financial and global equities markets. Welcome to the Think Tank, ladies and gentlemen. Let's jump right in. Grandpa Barney, thank you so much, man. You're too kind. The Think Tank truly appreciates your community, your help in the community, and supportive of us entirely. Thank you very much, my friend. This one is one that we have to talk about because the FUD, the fear, uncertainty, and doubt that is going around is kind of intense. And a lot of people don't understand what it means, and I think it needs to be addressed, as does my friend Pantheon AMC. Make sure you guys check him out on YouTube as well. Pantheon AMC, as well as everybody else here in the Think Tank, wanted to come back and have this discussion with you all so that you guys can be aware as to what's happening in the stock market, in the equities markets, and you don't have to worry about nonsense such as the CDCC, the Canadian Derivatives Clearing Corporation, retiring accounts from the DTC. It's not necessarily bullish, it's not necessarily bearish, but the timing, considering it's right before the implementation or supposed implementation of Phase 6 ISDA margin requirements coming into effect here on September 1st, 2022. That is quite interesting and suspect. My friend Pantheon, would you like to jump in here since you're extremely knowledgeable in this subject as well? Probably more so than I am, to help eloquently explain what the fuck this means.
So Marcel's opened up the international desk for us at the Think Tank to bring on some news here. Get the Canadian desk up right now. What you see on the screen, everybody, is something that's been making its rounds today. And it's from the DTCC showing that the account name under the Canadian Derivatives Clearing Corporation, account number 0323, was going to be effectively closed at the end of business today regarding the pledging of securities to it. Now, that right off on its bat made me and others look at it and go, wait a minute, let's take another look. But when you do a bit of a deeper dive into it, you understand that there's a different system that they're going to be running their pledging of their securities through, okay? So in February 2021, just over about a year and a half ago, they made a decision that the clearinghouses for Canada's equity and fixed income markets, the CDS, Clearing and Depository Services, CDS, and the Derivatives Market Clearinghouse, the Canadian Derivatives Clearing Corporation, as you see on the screen, the CDCC, entered a memorandum of understanding with a group called Euroclear in pledging to develop a new automated collateral management system. What they decided was we're not going to run our pledged securities through the DTCC anymore, or the DTC. We're going to run them through a group called the CDS. Now, why would they do this? It's designed to improve interoperability between existing domestic collateral pools and consequently resulted in an increased liquidity and efficient collateral mobility. Put that in English, Pantheon. What the hell are you saying? So what this is really going to do is it's going to allow them to mobilize collateral across all of their various CDS accounts so they can use that collateral for repo, securities lending, cleared and uncleared margin accounts. So it allows them on a different stage from the DTC to have access more internationally for mobilizing this securities pledged collateral for collateral against multiple things, like I said, repo, securities lending, and cleared and uncleared margin accounts. Now, again, they talked about this February 2021.
That's right.
Back then, they was subject to regulatory approval, which took place. The service was aimed to launch second half of 2022, which would be today. So what we do then is Boss and I and the think tank, we got together, we took a look into this. We looked at the DTC pledgee report, and we validated that, in fact, account number 0323 is only linked to the Canadian Derivatives Clearing Corporation, and they don't have any other accounts on the DTC pledgee report. So really all it means is they're not going to pledge their securities to the DTC anymore. It's going to go over to the CDS, and they don't need that account, so they're just going to get the account closed up that they're no longer going to use. So it doesn't mean MOAS imminent, but the timing, as Marcel said, is quite interesting. They look at, as Wolfie always says on the channel, these people, the government, the financial arms, they know what's happening before they tell the rest of the world, right?
Yep.
And when they're prepared, they make their moves. Are we saying this is imminent to anything? Not necessarily, but it's an interesting piece of information, and today is an interesting date. But it was planned since February 2021, and that's pretty much the whole deal.
Yeah, it's not anything that really is concerning, so we're not going to spend too much time here, but it is very suspicious that less than a month before the implementation of the Phase 6 is the margin requirements that the Cdcc is leaving. It's almost as if they don't want to be stuck in a situation where they're basically having to pay for other members' bad bets, such as their short positions, if they have to increase their margin collateral requirements, for example, and if there are losses in which the other party has to basically take monetary damages. The CDC doesn't want to have anything to do with that. So just like JP Morgan pulled a couple pledgee accounts in end of 2021, it seems now the DTC is being has an account from the Canadian Derivatives Clearing Corp leaving. So this is bullish news as far as you ask me, but definitely not something that is going to make me too concerned as to its immediate effects. But thanks so much for explaining that. Let's move on here. That was an excellent explanation. Thank you very much for Pantheon AMC. Make sure you guys check him out on YouTube. The man's got a lot of information that sometimes we don't touch on this channel, and it might be very valuable to you. So check it out. Big shout out to my man, it's me, Aaron, 1886 on Twitter here. He posted this just moments ago, stating that FINRA has finally done something of minor value, not much, charging Morgan Stanley with publishing 11,000 inaccurate research reports in regards to equities. That was only $325,000 fine that's been received, which is $29.54 per fine. Ladies and gentlemen, the cost of doing business. When was the last time you got a speeding ticket or a stop sign or anything like that? It was 5 or 10 times what Morgan Stanley was fined here for submitting inaccurate equity reports. They published between August 30th of 2019 and February 28th of 2020. Morgan Stanley published these 11,000 equity reports that included price charts with inaccurate historical stock ratings. These are reports that they give out to retail investors and other investors in general. As a result, this was a violation of FINRA rules, etc. These errors resulted from the firm's failure to establish and maintain a supervisory system. I call bullshit. The 11,000 reports here, in my opinion, were highly manipulated in order to get people to trade where, when, and how Morgan Stanley wanted. Between April 7th and May 17th of 2021, the firm failed to accurately disclose required beneficial ownership information in 1,616 equity research reports. So if you're on there looking to see who owns the companies and stocks that you're interested in, you may have made a very bad decision because of Morgan Stanley. For example, say you have your money invested in a thrift savings plan, and the thrift savings plan is being invested in a mutual fund which contains stocks. You look at it and say, okay, everything looks fine. None of this is owned by Chinese emerging markets or Chinese government companies, so I don't have to worry about sanctions against China or Russia, for example, hurting my thrift savings plan investment, my life savings if I'm a federal employee, or this is akin to an IRA or a 401k. It's pretty much the same thing for federal employees and military personnel. That being said, this is highly dangerous to leave this information out of reports in regards to the beneficial ownership as well as the actual fucking price charts. It's hard to do any technical analysis if you can't even get a price chart with accurate historical stock ratings. That's an absolute travesty. And to think that they were only fined $325,000 for that is sad. And the cost of doing business, and it's not sufficient. It's not sufficient to satisfy what would constitute as a fair ruling, because they're just going to continue to do the same things over and over again with impunity. Speaking of people doing the same things over and over again with impunity, Robinhood is facing an SEC probe on compliance with the short selling rule. You heard that right, ladies and gentlemen. Robinhood faces a probe by the SEC. This just came out. This article came out just over an hour ago on Bloomberg, and it is packed full of information. I actually have two other articles that I wanted to reference here, but it kind of squeezes it all into one, so we'll blaze through it pretty quickly. For starters, they're facing the U.S. SEC investigation into their compliance with the short selling rule. A lot of you know this as the uptick rule. The SEC's Enforcement Division requested information about Robinhood's adherence to Regulation Show and matters related to securities lending and fractional shares, said Robinhood on a Wednesday in a filing. Notice how quietly it was stated by them. And the online brokerage laid off 23% of its employees this week and has been facing regulatory actions repeatedly, ladies and gentlemen, in recent years. On Tuesday, Robinhood's cryptocurrency arm was fined $30 million. Robinhood allegedly violated New York's bank secrecy and anti-money laundering regulations. Are you surprised? The New York State Department of Financial Services has slapped Robinhood's crypto division with a $30 million fine. It's the first crypto-focused enforcement action by the regulator, which has issued the multi-million-dollar penalty against Robinhood for what it says are violations against the state's anti-money laundering and cybersecurity regulations. The Financial Services Department said it found significant deficiencies in Robinhood's compliance programs. They said apparently, there weren't enough people working in Robinhood's money laundering compliance program. The company failed to transition from a manual monitoring system to an automated one, apparently. In addition, the department found that policies within Robinhood cybersecurity aren't in full compliance with official and virtual currency and cybersecurity regulations. Robinhood improperly certified compliance with the department's transaction monitoring regulation and cybersecurity. It wasn't fully compliant with the state's rules. They violated the law, and they violated the law by claiming to be compliant. They failed to adhere to consumer protection requirements by not maintaining a separate phone number and displaying it on its website specifically for consumer complaints. There's a reason that they don't want you to call in to complain. There's many reasons why they lie and withhold the information here over and over and do not have these anti-money laundering systems in place, because it makes it a lot easier for them and their friends to launder money, allegedly. Well, oh wait, no, it's not alleged because they've already been fined $30 million for it. There's no allegations here. It's already been found to be truthful. Aside from having to pay $30 million, Robinhood must retain an independent consultant to evaluate if it has taken the appropriate actions to address the violations and deficiencies. So now, ladies and gentlemen, that Robinhood's little Ponzi scheme and money laundering scheme is over, well, don't be surprised to see that broker go the way of the buffalo. This, amongst many, are one of the reasons why I, Marcel Kalinovic, am starting with my partners a corporation, I should say a company, it is a corporation, by the name of Lit Xchange. Lit Xchange is a broker-dealer that is currently in the process of getting accepted by FINRA and completing our, finalizing our product to release to a certain number of limited retail investors as a beta test, if you will. So once we launch, we will be one of, if not the only, broker-dealer that allows you, the retail investor, to purchase securities directly through lit markets. So we will not force you to go in and, or like, for example, Robinhood and Webull, your orders go straight through dark pools and internalizers, and then they're sold to companies like Citadel and Virtue, which can then front run your trade. And that's why they are able to pay payment for order flow directly to Robinhood and Webull and Moomoo and all these other companies that accept payment for order flow from dark pool, from price distorting dark pools. And market makers, they use internalizers like Citadel Connect. That being said, as one of the only broker dealers in the world doing this, when the time is right, I would like to invite you as retail investors the opportunity to sign up for our beta program. But as of yet, it's not quite ready. We still do need some to finish up some final approvals, which I'm not really concerned about, because that's why we hire the best attorneys and the best people to help us, because I want to make sure everything goes smoothly and have exceptional services for trading both stocks and cryptocurrencies with wallet support as well. That being said, I look forward to sharing more information about that with you guys. In addition, before I move on to the final topic of JP Morgan's slush fund, I wanted to mention that tomorrow we're going to be discussing having an interview with Chief Executive Officer of Highcroft Mining Corporation, Dr. Diane Garrett, which will air at 4 p.m. Eastern Standard Time. She has some breaking news for us. And then afterwards, we will live stream to view the AMC earnings report and earnings call. That being said, let's get right back into the criminality that is JP Morgan and Robinhood. They said that as its business grew, Robinhood Crypto failed to invest the proper resources and attention to develop and maintain the culture of compliance. Significant violations of the department's anti-money laundering and cybersecurity regulations. And all companies in New York are subject to the same regulations, period. Notice Bloomberg keeps saying, instead of calling them people, they call them employees a workforce. They said Robinhood also recently announced that it's laying off 23% of its workforce due to record inflation and the cryptocurrency crash. It's the company's second round of job cuts this year and will affect employees across divisions. This revelation came after Robinhood published its earnings for second quarter of 2022, where it posted a net loss of $295 million and a decrease of 1.9 million retail investors, aka probably most of them are apes, dumb money apes that are investing in meme stocks such as AMC, GameStop, BBIG, MMAT, and dozens of other meme stocks that are heavily owned by retail investors and are shorted into the gutter by companies like Citadel Securities, for example, and it is allowed to occur by broker-dealers such as Robinhood, who fail to comply with the regulations on short-selling regulations, and let Citadel and Virtue use your money against you by taking your trade, paying payment for order flow from the market maker to the broker-dealer, in which the market maker can then front-run your trade, make money against you, marry puts against your calls in order to prevent themselves from having to delta hedge under their hedge fund. Therefore, without having to delta hedge, this distorts proper price discovery even further than running your order through a dark pool alone. Because running your order through a dark pool lobs it all together with millions and millions of other shares, and they're all traded at one price, thus decreasing the ability for share prices to properly reflect the actual value of a company. Lastly, my friend Cash Money, trillionaire here, brought up a great point. Cash, what's this lawsuit about again, bro? Just so other people can hear what's going on here, if you're there.
Deposition of wrongful termination from a JP Morgan auditor.
Yes, sir. It appears that JP Morgan allegedly, according to this deposition, states that JP Morgan allegedly tried to, or actually did, bribe Shaqualla Williams, the plaintiff, a former JP Morgan auditor. Shaqualla says that it was her job to investigate employee behavior, as well as it related to potential money laundering, sanctions, or other offenses, including corruption. And they also asked about another component to her employment at Goldman. She said that after a certain period of time, after a year, Goldman decided to open up a satellite office where they wanted to build a team in a lower cost location. They thought I was capable and ready to perform that task and build a team and start a group up there. Took on the customer work under the anti-money laundering group, as well as some market surveillance work. There are some other security matters that came up. Okay, but that doesn't matter. She says she hired 6 people and interns and worked for Goldman in that area. So then afterwards, she goes on to state that, let's see if this will ever click. She was auditing JP Morgan and has previously worked at Goldman and Bank of New York Mellon. So this is a very experienced auditor who was, as a matter of fact, bribed by JP Morgan to prevent her from talking about a slush fund. Excuse me one second, I got something in my contact. Makes it hard to see. Check this out here. There was emergency payment methods, they're called, and this is the same thing that President Trudeau in Canada, Tony Blair used to receive payments as well. Excuse me for the misspeak there.
Emergency.
Everything's an emergency with these guys. Close out a couple of these tabs I don't need.
It's really unusual that in a deposition you would hear about that bribery in plain, out in the open.
Excuse me one second here. This thing is lagging pretty bad because this massive discovery document is Our deposition is 250 pages long, so it is lagging a little bit right now as I'm streaming. But here is the meat and potatoes of what I wanted to get at. And let's see if we can actually find the part about Trudeau. I'm sorry, Tony Blair, because that's where we just were discussing. And they brought up a good point. They asked her, did you ever allege a failure of accounting controls? And Shakwala, the plaintiff, said that's correct. She did in fact find a failure in accounting controls. And they asked in what respect. She says, so in terms, well, we can just use the Tony Blair example. He has and was paid using an emergency payment method that the global supplier services team, Tim Napier, escalated to me, and it didn't meet any of the criteria for that method. And the chief financial officer signed off on all of his invoices for the wet signature. And at an institution like this, it's very odd that she's not approving something like this through a system. And at the time, the CFO was Mariana Lake, and it seemed or not seemed, this is actually what was happening. Mr. Blair's expenses as a TPI were being paid through this method as an emergency, where it should have just been a typical TPI salary payment. And that payment method was wide open for anyone to use as long as they knew where it was. They could just click through and pay whoever they wanted for whatever they wanted. The question was, if they had the approval of the CFO? Answer, actually, you don't need it. You actually don't need it. So when Tim Napier showed me the website, I didn't have any special access. And as an anti-corruption compliance group, we don't have access to much, really. I was able to without a problem. I'm sorry, you were able to what? Click straight through. Click straight through without a problem. Straight through to what? That emergency payment method system. The only thing they had was a red text at the top telling people what, the purpose of what the payment method is. It doesn't seem to be any controls around it. So they asked, here's the kicker. So you could have paid an unlimited amount of JP Morgan Chase's money to whoever you wanted? And there was an objection from the attorney. And then they said you can answer. I'm assuming it was the judge. The answer was, I don't know. I just know that this payment method and the way it was used for Mr. Blair was an example of failed accounting control. Any other failed accounting controls that you raised during your employment? Well, in the SEC regulations, regs call them internal accounting controls, and there were a number that are featured in the issues log that I had, as well as the PowerPoint presentation that I can't think of off the top of my head, but if I had those emails, I could provide more details. And they asked, your counsel has produced an SEC order relating to quad graphics, to which she said, yes. Do you have any understanding as to how that relates to the case? So quad graphics, the SEC determined that quad graphics violated internal controls in books and records for various reasons. The one reason that stands out is because of OFAC violations. Office of Foreign Asset Controls, people. This is what this means. Their violations are, guess what? Remember Executive Order 13959 as amended and 14032? They're violating those by continuing to allow the trades of those stocks, allegedly. I'll continue. So they lack the internal controls to screen for OFAC violations, and then they move forward and paid the OFAC-sanctioned entities, which became a books and records violation. Jesus Christ. They lack the internal controls to screen for the violations against sanctioned companies and paying sanctioned companies. Then they move forward and paid the OFAC-sanctioned entities, which became a books and records violation on top of that. Ladies and gentlemen, what you're seeing here is the one of many reasons why we have yet to see what we expect to see on stocks like AMC and GameStop. Because although there's been Chinese military companies that have annexed dozens and dozens of Chinese companies from these executive orders, 14032 as amended and 13959, and the updates to them in February 15th that changed ad regulations to implement to this November 12th initial executive order related to securities investments that finance Communist Chinese military companies. Those are these companies and dozens more that were added, such as these in February of 2015. These executive orders are taking collateral out, taking the ability for collateral to be purchased and sold in these Chinese companies away from market makers, hedge funds, family offices, etc. But as stated just moments ago, this June 3rd, 2022, for example, executive order that came into play back in January 28th, 2021, and again in June 2nd, 2021, that caused the squeezes. That was a large partial indicator into the reasons that the dark pools were overrun in in broker-dealers like Robinhood, because of the massive amount of purchases that were occurring from people and the massive amount of delta hedging that was happening from broker-dealers and that needed to buy shares in order to provide to their retail investors, and short that had to delta hedge by buying shares and marrying calls and puts and creating more futures and swaps and purchasing more of these in order to suppress the price of stocks. What we read here from Shakwala, the plaintiff in this JP Morgan case, was that JP Morgan, it has been determined that the SEC has determined that companies like Quantum Graphics violated internal controls and books and records for various reasons and continue to make OFAC violations. The violations are the same ones that prevent the ability for these guys to buy and sell those Chinese military stocks and collateral. That being, it's very similar to what Citadel Securities was caught doing by the New York Stock Exchange when they were charged with engaging in 502,000 wash sales using their computer algorithms. A wash sale is where the buyer and the seller are the same entity and no change in ownership of the underlying asset, the stock, occurs. I'm selling it from my right hand to my left hand algorithmically using a computer program to bring the stock down. Therefore, I can keep making purchases and sales of the same number of stocks over and over and over again. And that's how the float of AMC, for example, can trade 25 times in a single day because of the massive amount of wash sales, synthetic shares, naked shorts, swaps, abusive swaps, futures, and contracts that are being used all across the markets to manipulate the real stock prices. These wash sales are illegal because they can manipulate stock prices up and down. Citadel paid a $115,000 fine. That's less than a quarter. It's less than 25 cents for every violation that occurred. That being said, ladies and gentlemen, we're going to be so motherfucking rich when this actually all comes to an end. Because in reality, as equities markets lose their value, we're going to see this happen faster and faster. And we're going to... Hang on a second. My kid is in here. I got to get her out of here because I got to swear some more. That's for sure. That being said, my conviction is higher than ever. My conviction lies in the fact that the government always lies. And Citadel, Virtue, Melvin Capital, and all these other hedge fucks continue to do this same exact thing. They say they've closed out their positions, but the reality is nothing of the sort has happened. And they must maintain control of the stock price as much as possible. Lately, we've seen AMC touch the $18 mark. Well, earnings is tomorrow, and nobody can say really what's going to happen next at any given moment. But in reality, we're in a bull trap as far as the S&P 500 goes and the stock market goes, and that's my non-financial advice, my non-financial advisor opinion, because I'm not a financial advisor of any kind. But I want you to do your own due diligence. Go look into the naked shorts. Go look into the synthetic shares. Look up what married puts and married calls are if you're not aware. Go look into abusive swaps, total equity return swaps, callable yield notes. All sorts of different vehicles are usable. For example, even as simple as selling the same stock from my right hand to my left hand to reduce the share price, to make sure that my over leveraged short positions don't get me margin called by my bank, my prime broker, or the DTCC. Anybody got anything else to add? Because I'm done. I could go on for It's going to be fucking filthy. I cannot wait to make this HKD bullshit look like a complete joke. HKD pump and dump just went up 32,000% in the last several days. There are no options on it, so that retail investors cannot short it because we would make money off of it. There are no options on it, so that retail investors cannot buy it. It was tough to buy. And when the price was low, it was very tough for retail investors to buy any of it at all. There were orders not filling. And then when the price was high, and today we saw a several hundred $100 a share decrease in the stock price, retail investors were actually able to buy. Surprise, surprise, ladies and gentlemen. Surprise. Is the biggest pump and dump and money laundering operation that has occurred in many years as far as AMTD/HKD stock tickers, in my opinion. On that note, AMC and GameStop, we've got dividends, we've got NFTs, we've got earnings report for AMC coming out tomorrow, and every earnings report, AMC has been down. Even though they've beat earnings, their earnings per share are increasing, they're paying off debt, they're getting records of numbers back in the box office, and people are still surprised when the earnings report comes out and AMC share price is down. Ladies and gentlemen, what are you fucking surprised about? The price isn't real.
I'm hoping that Cash's printer is not running on diesel.
Yeah.
All right. I wish you all peace and wealth. Make sure you check out the Diane Garrett interview tomorrow here on this channel or on Pantheon AMC's channel. Thank you, everybody, for your support of myself and the think tank. Look forward to discussing with you again tomorrow. We will see you for 4 p.m. Eastern time with Diane Garrett, and then stream AMC earnings call afterwards. Thanks, everybody.
Good job, Marcel.
Appreciate you guys, you fucking rich bastards. Holy shit. Man, you motherfuckers are gonna make so much money, dude. If you know how to fucking buy and sell properly, you'll be so goddamn rich. Good luck to all. Again, nothing here is financial advice of any sort. Do your own fucking due diligence. If you're gonna be in the stock market, be aware, it's straight fucking gambling. It's not investing, it's straight fucking gambling. I've been doing this a long time, and a lot of people that have been doing it twice as long as me will tell you that exact same fucking thing. Nice job, Cash. Nice job, Pantheon. Thank you very much, guys. Ryman, Road Dog, Pugs, Prometheus. Thanks for always showing up. Jam Bams, Diaz. Good deal, guys. Dwayne, Volsvans, Raindrop. Appreciate you guys. Viv the Vegetarian. Zoombot. Much love, everybody. Thank you for coming out. Hashem Ashraf says, hello, guys. Hello, boss. I'm an economics guy in an 8th. Never seen high inflation, bonds crashing, housing crashing, negative 35 basis inversion, and SPX pump with no volume. The greatest rug pull is on the way. Then Moas. Thank you, Hashem Ashraf. It's a pleasure to meet you, my friend. We appreciate your support. Thank you, Grandpa Barney, as well. You're too kind. Radwan Siraj, owning the float. Bajos, thank you to everybody who has subscribed. All you 20,000 plus beautiful red-pilled bastards. Appreciate you guys. Thanks, Mitch Natter. Appreciate you, bro. Eric Vizcara, Jay Bridge. You guys are the best. Haywood Jablome, Rand Steve. You guys are too kind, my friends. Thank you very much. Texas Made 204 says, I appreciate all of your research and dedication to educating us on current and possible future market outcomes. What's the process of getting into members only club to see your restricted videos? I'm also looking forward to your lit exchange. Well, I don't have one yet, buddy, but I'll come out with a process soon, I guess. The members only club, it doesn't really exist yet. And lit exchange, I cannot wait to bring you guys that information. But alas, that has to wait a little bit longer because I can only share so much until we are fully registered with FINRA and all these cats, these regulatory bodies. I cannot do anything that would be constituted of selling securities or anything of the sort, so I have to be very careful in what I do and say for now. Thank you, everybody. I wish you a great evening, peace, and wealth.